Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over the market, let's go over Tesla, and let's figure out what is happening today in the markets. As usual, I am not a financial advisor. This is not financial advice. If you enjoy the video, don't forget to hit that like button, and my membership section on YouTube is of course live. If you're interested, the link is down below where I post intraday updates on Tesla as it moves and chart updates live as well. But with that being said, let's jump into the markets closing in just about half or 20 minutes or so. Tesla looking like it'll be closing about down 0.7%, almost a percent on the day, which compared to the market is, it's kind of in line, maybe slightly outperforming even, right? It's in line with SPY roughly, but QQQ definitely outperforming because it's less red than QQQ, which is a good sign to see. But what does this all mean, right? Because we're closing pretty much just shy of $450. Now, is this good? Is this bad? Is this a bottom signal? Is this not a bottom signal? Let's try to figure that out. So not much happened today overall, though, compared to yesterday, right? Yesterday we had the massive fall, beautiful rally as well. And today we're pretty much just trading within the same zone that we traded in yesterday. Now, what does this all mean though? So the thing that I don't like, I'll be honest, there's more things I don't like than I do like, but there are some potential short-term bullish options, I guess, that are available that I will discuss. But the one thing I don't like, that I'm not a fan of right now, honestly, is the fact that we are having a lot of issues in the low 250s, right? Like we talked about yesterday, this low 250 areas, you can see, acted as a lot of support over here, right? We had some resistance over here, some resistance here, then we finally blasted through it. But, ultimately it was a lot of support and resistance in the previous levels. Then we even came down to it overall, all the way over here, rather, to 250, and got a beautiful bounce off of that level as well. So, 250 to even as high as 255, that low 250s range was a good support. Now, of course, it's going to be acting as a resistance. As you can see here, 255, plenty times it reacted as a resistance as well. A lot of resistance over here in 255 and some, support and some resistance as well. So again, as usual, when you break through these levels, it now turns into the opposite, right? Now all these levels are going to be a resistance, 250, 255, and so on and so forth. And that's not even taking into account the 21 EMA and the 50-day moving average, which is of course also just not too far above us, right? 255 for the 50-day moving average, 21 EMA, kind of pointing straight down, trying to catch up to us now that we've fallen below it, but it's sitting at 260, right? So, that's going to be resistance level 260. Then we have the dreaded 267 to 270 that we just couldn't break through, right? We have like this kind of 262-ish area that you can see over here. Many times it was also a resistance. So the point I'm trying to make here is the fact that it's not good that we not really blasted through them, but we did fall below a lot of pretty important resistance points. So now, support points, but now they're going to act as a resistance, and that's going to be a lot of work to get past them once again, especially with the potential idea that there's really nothing, there's no like very crazy bullish news on the short-term horizon for Tesla. Obviously medium-term and especially long-term, no questions asked, right? I think Tesla will do phenomenally. Short-term, however, if anything, we're getting bad news, right? We have, of course, the CFO switch, which is, not necessarily bad news, but it's definitely uncertain news. And in the market, usually uncertainty equals bad news. On top of that, we also, of course, have the potential cage match with Elon and Zuckerberg, right? Who knows how that's gonna play out and what that's gonna potentially entail for Tesla stock. Again, if anything happens to Elon, knock on wood, obviously not great for Tesla stock. So that's number one, right? We have the fundamentals that are looking a little bit, kind of questionable right now. Nothing too crazy. We have, of course, breaking through a lot of supports now, of course, turning into resistance. We have, of course, seasonality, which is just not looking great for the following month, right? September and October. August is a decent month though. So with that being said, again, a lot of work to go back up. But with that being said, there is one potential bullish pattern that I can foresee happening right here, pretty much even right now, or potentially even starting this week. And that's going to be the inverted cup and handle. So you can see right here, we have the potential cup right here formed from this 240 over here, massive kind of, U shape, if you will, over here, all the way back down to pretty much 240 once again, right? Very close. As long as we hold 240, this play or this pattern is in play. Now, the way I look at it is, as long as this is in play, we can potentially be forming the handle next, which is, of course, going to give us a bit of a bullish bounce, right? And the question, of course, might be, well, okay, where can it potentially bounce to? So as usual, because I think we're on a bit of a downturn now, we take the Fibonacci from the swing high to this swing low over here. And I personally would be eyeballing somewhere around the 382 to the 0.5 level, right? The 271 to the 264 level, potentially get a bounce anywhere between that range. 270 makes a lot of sense because that's kind of the level we've had so much issues before. So we kind of get roughly close to that. And then I think from there, that's kind of what sets up that the handle, which I did talk about to my members, or right over here on this post. I think I have it on, I think I switched accounts. Okay, whatever. But I'll just draw it again. So it will be something like this, right? So it will be kind of like this. Just so, again, a very rough example. This doesn't have to be perfect. This is just for demonstrational purposes, right? But it looks something like this. The point is, right? And then you kind of zigzag into it, create that handle, right, from the cup overall over here. And then as this handle gets formed, and assuming, of course, it breaks to the downside, which it most likely will, assuming this pattern even continues as I say, then you, of course, have a breakdown from the handle, and then you measure usually the difference, or sorry, the bottom to the top of the handle, which in this case, since it's inverted, right, this is technically the bottom, this is the top of the cup itself, rather, kind of roughly like this, give or take. Again, this is just a rough demonstration, and you measure from where the breakdown will occur. So assuming we come up to somewhere around this level, the breakdown will probably occur somewhere around here, and that kind of measures the overall potential distance that we fall after the cup and handle pattern continues and actually gets validated, right? Which of course will bring us to around that 220 to 210 range that I've been talking about for quite some time. But the way it gets validated is simply if the handle forms, number one, you break down from the handle, right? So you'll break southwards, and especially once you break the neckline, which is of course going to be roughly that 240 level. So keep that in mind. The 240 level, probably the most important level to pay attention to as a bull and a bear, right? Regardless, because if that breaks, like I said also many times, there is of course extremely little, let me go ahead and open this up. Let me go ahead and bring this up, volume by price, right? Extremely little volume overall in this overall range, below 240, right? Up until we pretty much re-hit 220s once again, and especially 210, which is kind of that price range, I would guess, for the cup and handle pattern. Again, assuming it actually forms. The RSI is still looking kind of bearish, right? Still making lower lows, even though the stock is technically still making higher lows because we haven't broke this low over here. So it's still, as the stock is still, again, technically making higher lows, we're still making lower lows on the RSI, which again is still the formation of a bearish divergence, which is something I personally value, or bullish divergence. In this case, is bearish, but I do value that, and I am looking at that pretty significantly. So just keep that in mind, right? That's something else to consider. But in order for this cup and handle pattern to form and the handle to actually form itself here and continue the pattern, we have, like I said, many massive resistance points to break above. Again, 250, then 255, 260s. Of course, in between that, we also have the 50-day moving average, right, at 255 roughly right now. Then we have the 21 EMA, pretty much 260 now. It's a lot of work. Let's just say that there is a lot of work to be done. And again, without too much fundamental positivity, I guess news on the horizon, unless something, comes out of nowhere, of course, which is possible. You never know. That's why you always want to be, taking things with a grain of salt. No one knows for sure. But assuming nothing like that really happens, that's super obvious. It's going to be a lot of work, right? It's going to be a lot of work and momentum that will have to somehow get found somewhere for Tesla to get this kind of rally going. So just keep that in mind, right? But like I said, with that a price target I have all the way down there, that is also the 100-day moving average, which is sitting pretty much almost at 220 now, right? It is, like I said, slowly playing catch up to us. So that's something else to consider as well. So take all of those information, guys, as you will, right? We also have, of course, the pivot point, which is actually looking like we're entering some potentially sold territories on the pivot, right? Again, this is kind of the opposite of the MACD, right? When it's all the way up, that's kind of bad. And when it's all the way down like this, it's actually kind of good. So usually, when it gets this low in the bar, you can see it's starting to get to some decently oversold territories all the way at the bottom. That is telling me that, there's a decent potential for some form of bounce, which again, if we do get, I will just view it as potentially forming that handle. The bright side, however, I will say, and believe me, I hate sounding like a bear all the time, but the bright side is if we do form the handle and let's say it plays out, right, and that kind of gives us that August bounce, which is known to be a pretty decent month for the market in Tesla, right? Like I said over here many times, right, 58% win rate, in terms of being green for the month, which is pretty good. But that would essentially give us that August bounce, right? But that, of course, as we get that bounce for August, will also lead into Tesla's by far two worst months, September, October, which will of course then play out that cup and handle pattern, and which will kind of make sense and line up with seasonality there as well. So that's something else to consider. But the flip side, or the news is that I was going to say, is the fact that if we do play this out, and let's say we create the candle, we break down below and we fall down to like 220, maybe even 210, that's when I can finally truly start flipping bullish on Tesla, and I can stop sounding like a bear all the time, because I hate it. Don't get me wrong. I don't want to sound like a bear. I just want to tell you guys, yeah, it's going to bounce from here. This is the bottom, I think, we're going to go up, and ultimately this is a great buying. I want to be saying all these things. It's just, I can't say that with a straight face, not right now, personally. Again, if your time horizon is just forever, like 5 years, 10 years, and you're just buying the dip and you're not even trading it. I mean, first of all, I don't know why you're even watching the channel. Second of all, not a horrible place to do it. But again, take that as you will. Not financial advice. I don't know. Maybe I'm wrong, right? But, those are the main things I'll be paying attention to, guys. Keep that in mind. And the final thing I want to take a look at is, of course, going to be the overall order blocks, right? So you can see we're still trading within this massive buy order block all the way down here in the 240s, pretty much the whole of 240s. And on top of that, we have sell blocks right above us as well, which are, of course, are sitting at 250s, high 250s, and all the way up at the dreaded 267 to 270, which is something to pay attention to as well, which again, if we do create this handle, I think will potentially come up as high as to this order block all the way up here. And then from there, I think is where the sell-off will happen. And I think that's when the September and October bearishness will really kick in. And from there, I think we'll find a bottom, and then I think we'll have a great rest of the year after that. But that's kind of what I am seeing. So let me know what you think down below. If you enjoyed the video, don't forget to hit that like button. But thank you so much for watching. And of course, I'll see you for the next one. Peace.